Joining us now is Jeff Yastine, Senior Equities Analyst over at Banyan Hill Publishing. Jeff, great to have you with us. Markets not liking what these Caterpillar earnings have to say. What does it mean for the markets?
You know, I think at this point, investors really need to sort of discount what's happening here with Caterpillar this morning and just think of it from a longer perspective. You know, we've had the market basically move straight up for the last 4 weeks or so since the bottom just before Christmas. So think about it that way. People are feeling more comfortable. There's better things on the horizon regarding U.S.-China trade talks, the Fed perhaps moving to the sidelines in coming months. So this is an excuse for traders, for Wall Street, to take some profits and frankly to put a little more scare back into investors before we set up for another rally. That's my view.
Yeah, Jeff, how did the earnings this morning from Caterpillar change your view about what's happening in China right now and the effects that slowdown in China will affect bigger companies reporting this quarter?
Remember, you know, this is fourth quarter numbers for Caterpillar, and at this point, the market and investors in Caterpillar who have a little bit longer term perspective are going to be looking at what's ahead, what's just over the horizon. We, of course, have the at least anticipation that the U.S. and China will get in a better situation, a better place regarding their trade agreements. And then we also have the discussions in China regarding extra stimulus measures and those sorts of things. So I think when you look at those two together, along with just a better overall outlook for emerging market stocks, and again, the Fed perhaps moving to the sidelines, that means a lessening in the way of interest rates, and that, of course, helps emerging market stocks. It's going to help China as well.
Jeff,
when it helps China, that helps Caterpillar.
You said this is going to be a blip, right? This pullback, some profit taking that we're seeing. So what is going to fuel the next rally that you see coming in your eyes?
Well, we have three things coming up this week. And by the way, I don't really expect any big, breakout rally this week. I think for the next couple of weeks we move back. There's support around 2,500 on the S&P 500. I think we move back to there. The things we need to look at here, we have the Fed meeting coming up this week. I think the Fed will say good things that the market likes. We have quarterly GDP. I think that comes out on Thursday. I think the market's going to sort of look past that because of the government shutdown and the impact that's had on collecting the data and interpreting and analyzing the data. The third thing we have, late in the week, we have the high-level talks starting between the U.S. Trade Representative, Lighthizer, and his counterparts for China. And with those coming up, especially the U.S.-China talks, I think that's what the market's going to be looking at here. And just like we've seen for the last 3-4 weeks now, the market is looking for movement on those U.S.-China talks. That's the key, in my view, to this entire situation.
Let's talk government shutdown here, because hundreds of thousands of employees for the federal government going back to work today after being furloughed for more than 4 weeks, 35 days to be specific, the longest government shutdown in U.S. history. Jeff, why do you think we didn't see more volatility in the markets and in fact saw just a great start to 2019 while the government was shut down? What did the markets see that we didn't see?
I think there are two elements, and we covered a bit of them already here. One is that there's always the anticipation when the shutdown ends, the government employees get their back pay, and of course then you get the counterweight on the other end as they go out and buy more of the stuff and make more of the payments and what have you that they couldn't during the shutdown. So it's sort of a one-off in that respect.
So Jeff, did the markets call President Trump's bluff?
I think they did. And perhaps we would have seen more of an impact if there had been nothing else on the horizon. But like I was saying earlier, I think the real key is the U.S.-China trade talks. That's what the market is focused on. And the shutdown sort of moves to the background as far as the market's concerned in a longer-term view of where it's going to go.
Jeff, but it definitely still is looming, right? President Trump giving that interview to the Wall Street Journal overnight, saying that it's less than half of a chance that he thinks this will actually be resolved, and that either means one of two things, another shutdown or a national emergency, which he said he was not afraid to declare. If that happens, and we should say the market was down 100 points this morning before this Caterpillar news came out on that journal report. If that happens 3 weeks from now, what does that mean for the markets?
Well, I think that the fact that Trump is out there talking about this, and we see the reaction, or at least what you could read partially into the reaction of the S&P futures over this morning, I think the market will be discounting that idea over the next couple of weeks. And we'll see what the president comes out and says in coming interviews over that time. But I think overall, it's like you were saying earlier, the market in many ways is calling the administration's bluff on the shutdown aspect, and they're not really looking at that. The key is China.
Let's talk earnings, because it is an absolutely huge week for earnings. We talked about Apple, we talked about Microsoft, Facebook, PayPal, Alibaba, Amazon, all happening this week. What are the themes that you're looking for, Jeff?
I think the main thing is, at this point, I think Wall Street is going to look past whatever those numbers are. You'll see the knee-jerk reactions like we've seen with Caterpillar. I think NVIDIA was selling off this morning as well, based on some of their results from the fourth quarter. I think they're really looking at this point to having the conference calls with analysts in which they sort of give guidance on the forward look here. And again, I hate to sound like a broken record, but it really does then just come back to China and the Fed, and both of those actually have, better positive outlooks, as long as we don't see something where both sides move away from the negotiating table completely, and somehow the situation becomes much colder than it's been in recent weeks, where you see this constant flow of chatter about talks and making movement and those sorts of things.
Jeff, my question is Microsoft set to soar? Because we know that it is already the most valuable publicly traded company. It has the least of all of these big tech companies when it comes to exposure to China, and it is gaining market share in the cloud. It feels like this stock could be in a good place.
I agree. It's at this stage, it's sort of the equivalent of the technology safety stock. If you're buying telecoms or something like that you can't get into too much trouble with. Microsoft is sort of the new IBM, the safety stock in that respect for technology. But I don't see it moving much higher than what it already is, though, only because it's already at a pretty full valuation compared to even what it was, say, 20 years ago. It's at a very high PE level right now. A lot of the good things that we see in it are already sort of baked into where the price is at this extended level, in my view.
Yeah, the stock down with the overall market today, down about 1.6%, and that is consistent with what we see the Dow down 1.5%. Jeff Yastine, Senior Equities Analyst at Banyan Hill Publishing, thanks for joining us.
Thanks, Jeff.
Absolutely, thanks.